What's up, team? Today we're talking goals and how to achieve them. Big, gigantic, important goals, or small, strategic, really important goals. But either way, they're your goals. And we want to talk about a framework for success. I'm a firm believer that everyone has the capacity to be wildly successful at achieving anything they want in their life. If it's losing 10 pounds, getting to $100 million net worth, maybe it's getting into Harvard. Whatever it is, it's important that you understand the best way to get there, because oftentimes failure isn't a lack of desire. Failure is not a lack of wanting it. Failure is not a lack of intelligence. But if you don't have a map that can take you from where you are today to where you want to be, it can feel very difficult or downright impossible to achieve your goals. So I asked Twitter earlier, is there any particular goal that you personally might have in mind? And the first response was coming from my buddy Dimitri, who said, look, in 15 years, I'd like to retire with $20,000 a month in passive income. And I thought, you know what, that's a pretty big, audacious goal, but something we can work towards. I'm not going to build out the entire framework, but I want to give you a very basic approach to how you can do this and leverage it and let it be the thing that brings you to your goal. Now, before I jump in and show you some of the stuff here, I want to call this out. This isn't half speak. This isn't YouTube, magic here. I run all of my major things through this process, through this segmentation of steps, and you'll see it. It's very simple. What makes it very difficult is the amount of granularity, the minutia of the steps that we want to get into, because it's that minutia, it's those baby steps that can feel almost daunting when you first start. So for followers of this channel and anyone who follows me on Twitter, you know I'm building another big company. And one of the first things I did was break it down into my 100 steps from zero to exiting the company for what I hope will be an 8-figure exit. And we're working on that. Now, I'm going to be really frank with you, though. I still haven't completed my 100 steps. And if you haven't figured it out yet, this is a 100-step plan to drive from zero to success. It is nothing more complicated than that, but it's the way you think about the steps that's most important here. And the beauty of it is you don't need math skills, you don't need technical skills, you don't need any specialized skill set. You just have to be willing to sit down and take your time and think about the goal and what baby steps go into each piece of it. And every time you come up with an idea, try to break it down even more and then try to break it down again. I'll show you how we do this in a second. But again, first things first, this is about achieving goals that are important to you, right? So you can break anything down into bite-sized morsels that can be completed in the next hour, in the next 24 hours, maybe this week, maybe a month, maybe it's 6 months, maybe it's 2 years, or maybe it's 15 years like today. The name of the game is achieving your goals and reaching success for what you want to achieve. And that's really going to be the premise here today. So as usual, I'm not going to waste any time giving you fluff or some more story on this. Let's jump in and actually talk about it. So I'm going to share my screen first and foremost here. So here's the deal. The first thing we need to understand is for Dimitri is, what do we need in order to achieve this goal of retiring in 15 years with 20K a month in income? Well, it's important to start to benchmark this, right? So what I did is I went to Vanguard's calculator here, and really, really simple. I just went to their investment income calculator. You can Google it and it'll pop right up. I'm assuming I can get somewhere around a 5% yield, give or take, based on today's rates, and probably have that long term if I lock some good things in over time. And I need to understand, what is the investment amount I need to generate a 5% yield that will give me 240K a year or 20K per month, right? We're assuming that this is gross for the sake of this exercise. So as you can see here, at a 5% yield, at 4.8 million, we need, excuse me, 5% yield will need a $4.8 million investment amount to achieve that 240K of income. Now, I do want to call it out. Depending on your skill set, your ability to define and find yield, and the type of path you take to solve this goal, this number can change wildly. For instance, a 6% yield would mean only 4 million needed. A 10% yield, of course, would mean 2.4 million needed. So depending on what you can get for a yield will greatly determine your ability to have long-term generative income from that investment amount. But I want to call it out. This isn't an exercise of what we get for yield for the next 15 years. This is truly an exercise of understanding, how do we get to 4.8 million so that we have lots of buffer. And even if we get close, potentially we're still well over where we need to be to get that 20K per month. I wanted to show you this yield with the investment amount to show you just how difficult it would be if we tried to save our way up. It's just not going to happen. And here's how I can prove that it's not going to happen. We're going to switch screens for a second here. And at investor.gov, a great calculator that I would urge you to save to your favorites is a savings goal calculator. right? Our goal is 4.8 million. It's a huge number, but it's also not a big number. It feels huge if you're thinking about saving your way there, trying to take money out of your paycheck and put it into a savings account, and maybe over 15 years, see where you're at. You're not going to be at 5 million unless your income is like $1 million, right? So you got to really think about different ways to do this. The initial investment amount is zero in this case, but I had to pick a number per the calculator's settings, so I just threw $100 on there. We know we have 15 years to grow. We're going to estimate roughly a 5% interest rate on that money. Now, I wanted to show you this because it's really, really quite funny. This is why savings won't work for hitting goals like this. Okay. If I contribute $18,000 every month over the next 15 years towards that goal of 4.8 million, I'll get there. I want to say that again. I would have to contribute $18,221 a month to hit that 4.8 million so that I can then make 5% on it to earn $20,000 per month. Team, obviously, if you're already bringing in 18 to 21, you're doing something really right, and you're probably not able to take all of that and throw it towards this. So clearly, this isn't an exercise of saving. It's an exercise of how do we explode our overall assets and net worth to then use those down the road as a source for passive income to be earned off of. Okay, that's where it's important to understand the goal, the numbers that matter for the goal, and how we're going to then deliver those results. So I want to switch screens for just a second here and call it out. Our goal now, as we understand it, is we need to be somewhere between 4 and 5 million in total assets, right? That can be made up of lots of different things. This is just an example video, not necessarily the steps that anyone should or shouldn't take. So we need to know a few things. We need to start to understand where we are today. We know where we have to get to. We have to think about the process of what can happen in the middle and how best to get there, okay? I'm going to lay out an example that I like to use. You might have 1,000 different ones. What I would really appreciate is if you're watching this right now, drop a comment below and just let me know, would you go for investments like stocks? Would you go for real estate, or would you start a business? I'm really curious to see what you think, so please drop it below. So, stocks, real estate, or start a business. So let's jump into the actual framework. This is the actual sheet I use. I made a very, very simplified version of it. This way you don't have to pay anyone to make it for you. You don't need to ask me to get a copy of it. You can do this yourself in Excel. It's super, super easy. Excuse me. So I'm going to share my screen one more time and show you this super basic sheet I use. Okay. And I want it to be as simple as possible, right? Our big goal is 20K a month to retire. We're starting at step 1, and all the way at the bottom here, we're going to hit 100 steps. We should achieve somewhere around 4.8 million and 20K in passive income, and we're complete. Couldn't be any easier, right? Well, nothing's quite that easy. So here's what we know. Part of getting to that 20K a month is we need to achieve 4.8 million in assets that will then be able to yield 5%. Now I want to call this out, that 5% yield for this exercise, not very important. The 5% yield is simply calling out that in the future, at that 15-year mark, maybe even earlier, we need to be able to take those 4.8 million in assets and find a way to yield 5% off of them. Now, depending on the route you take to get here, you might have that already built in. So it's just a good number to keep in the back of your mind, okay? And also from an assumption perspective, it's very important to do this when you build this out. You want to understand where you are today and be very clear about it. I'm assuming we are at $0 saved and $0 of passive income, okay? This way we can just start fresh. Then the other thing I like to do is think about the different components of getting to this goal in terms of where I am, how I might get there, what levers or dials I can pull on or twist and turn to try to achieve this goal. So keeping it, again, really, really simple, right? We have current income and I have expenses rather. I have a certain aspect of abilities that are unique to me. It could be anything from construction to an accountant to dental work to making YouTube videos to anything that you have that are abilities that maybe are above and beyond just your standard W-2, right? And of course, we have our W-2. Perhaps we have 1099 jobs, right? Think Uber, think Lyft, think DoorDash, think lots of other things. Then we have the stock market. We have real estate. We think about leverage and how we can leverage to get to this size number, because leverage is going to be important here, team, right? We want to understand our time frame for when we're trying to achieve this goal. In this case, it's 15 years, but for some people, maybe it's I want to lose 10 pounds in the next 3 months, but keep it off. So that's a whole different framework of thinking than it is for a 15-year goal. We also want to focus on, should we be looking at startups? Should we be focusing on starting small businesses? What can we do to help to achieve this goal? So as I step back and look at this as someone who does this on a pretty regular basis, getting to about 5 million assets, that's a huge, huge goal. And when you look at it as today I have zero and now I need to have 5 million, it feels like a guaranteed failure. It feels like there's no way to get there. It's not realistic. There's no possible way I could do this. But the reality is, we don't need to look at it that way. We're going to break this down and make it super, super simple, super easy, and find ways to apply current situations where we can make small improvements in the near term, leverage those improvements to drive leverage opportunities that will both increase my overall asset holdings as well as income from those assets, and then how we can continuously reuse and efficiently recreate those same motions over and over again. Now, this is going to be just purely an example. There's about 15 ways already in the top of my head I could do this around different types of investments. Perhaps there's different small businesses I would start. Perhaps there's different startup ideas. Perhaps there's some online businesses I would think about. But for the sake of talking about this, I want to use a really basic example and just talk about real estate. I'm going to talk about absolutely nothing that I have not personally done because I want there to be no fluff and no BS in this. So if someone comes back and says, can't happen, this doesn't exist, it's bullcrap, I'm telling you, shame on you for being someone who already wants to fail, because that's what you're doing by saying those things. I can assure you there are so many ways to do this. It's going to feel easy by the time you're done with it. But the most important starting point for all these exercises is very simple, right? The first thing we want to do is build a budget sheet. So a budget sheet is simple. This is going to be an Excel spreadsheet, much like you see here. We're going to have all of our income, all of our expenses, right? So we're going to break this down, right? In sheet, show income, expenses. And what I also want to do is, if you have any, we're going to say estimated worth, okay? The reason this is important is we're not talking about investments. We're not talking about real estate. Because again, remember, we're starting at $0 saved, $0 passive. But you're going to see where we're going with this in a second, okay? So the next thing we want to do is create a new sheet, right? Or new page for income. Where can we increase? This is going to be things like understanding, can I ask for a raise? Can I get more hours? Is overtime available? Are there shifts? Am I in sales and could sell more, right? This is just an example, team. I expect everyone to do it different, right? We want to do a new page also for expenses. What can we cut and or optimize? So first step here is I want to understand a true beginning point to getting to $5 million. What is my current budget, right? After I earn my money, I spend the money, what's left, right? So when we think about that income, how do I increase that income? And how do I decrease those expenses? These are actual steps that you need to do. You need to open up Excel. You need to create that front page budget. Then you need to create a new sheet for income, create a new sheet for expenses. And by the time you're done with this, do you know how good you're going to feel that you have this on paper? Because now you're already on the right path. You know where you are today. It becomes so much easier to focus on where you need to be tomorrow, right? And the last thing we want to do here is itemized net worth. This is a little bit funny one, okay? So I'm going to explain what I think about this, right? On a new sheet as well. Okay, so these are all pages. We'll call it a new page for the sake of keeping it simple for folks who are watching. On new page. So the reason we want to do this is to also think about where can we start to pad or create some sort of a cash holding, right? This could be as simple as making sure that if an emergency pops up, I have it covered. Just general things that we're trying to work towards. Now, what I want to call out is if you are in bad financial shape, or you're earning very, very little, or you're breaking even, or don't even think you're breaking even, maybe your goal today is not generating $5 million in net assets. Maybe your goal is actually getting to a point where you are now earning more than you're spending. That's an equally great goal, and one you can still use this success plan for, and then let that continue to the rest of this, okay? You see what I'm saying? How it's always progressively, where can we break it down further? So the itemized net worth piece is looking around where you live, how you live, what you have around you. What is the value of the things that you probably don't really need in your life? And it could be simple things like, are there clothes that we can sell secondhand? Are there pieces of furniture? Is there stuff in the garage? Just anything that has some sort of value that might help you start to generate some cash in hand, assuming you have zero saved today. Because we want to start with something, okay? The next piece we're going to do is we are going to pull our credit. Our credit. Use agency free reports. So the key here is we're going to go and reach out to one of the three credit agencies, right? TransUnion, Experian, Equifax, whoever you like to use or want to use. And you're going to request a free copy of your credit report. You can do all three, actually. I believe. I haven't done it for a long time. And you want to go and do this right now, right? Finish your spreadsheet, get everything in there, understand your income, your expenses, what you own, and now pull your credit. Sometimes it might take a little bit of time to actually get it in the mail. Either way, though, it's got to be done. The goal that we're starting out with is to start to define where you are from a financial perspective, how much you earn, how much you spend, what you have that you could potentially turn into liquid cash, as well as what you have from a reporting perspective. Now, the focus for me on this is I really want to start to think about real estate as being the highly leveraged way that can generate a goal of hitting 5 million in assets. And realistically, a lot of real estate is going to have a better yield than 5% ultimately. Excuse me. So this 4.8 might drop down to 4, 3, or even that 2.4 if you can get a 10% return on those real estate deals, assuming they're paid off in the 15 years that you're going to retire, especially that investment real estate. Plus, we're going to be able to have tax write-offs. We're going to have appreciation of the underlying assets. We're going to have depreciation. So I'm not going to go into all the details of how to do it. I just want to call that out as I'm thinking about this, right? So once we sort of have this total picture here, what we want to start to do is really think about, and I'm not going to finish writing all this out. I want, Dimitri, you should definitely do this. I want anyone else who's looking at this to do it. I want you to start to think about the next step is how much would I need realistically to purchase a piece of rental real estate, for example? Now, much of the properties that I buy are generally between 80 and $100,000. Okay, so at 80 to $100,000, that means I need to have a down payment of about 20%. So let's just assume anywhere from 16,000 to 20,000 is going to be your down payment. And then let's even have an extra 4 or 5K of buffer for closing costs, expenses, inspections, all that other good stuff, and then things that might even happen after the purchase. So let's aim to figure out a way that we can actively start to save every paycheck, and get some of that liquid cash going, and even maybe take on a 1099 job, a DoorDash, a night job, start a YouTube channel, right? Try to generate income there. How can you start to generate more income and spell it out here, right? Like I'm going to say, start Uber, right? Add 2 more hours a week to Uber, right? Really things like that. I don't want this to seem silly, but this is quite seriously how I would approach it until I get to that down payment level. Once I have that 16 to 20K plus my little buffer on top, I would have already started reaching out to realtors in the areas that I've targeted. So if you're sitting here and saying to yourself, Sean, there's no way that you can buy real estate for 80, 90, $100,000. It doesn't exist. Team, I'm telling you, not only does it exist, I buy it all the time. The last property I bought was not the last, the second to last property I bought was $83,000. It rents for $900 a month. So I will just I'll just say this: if you're already yet again coming up with all the reasons why you can't do this, totally continue doing the things that you want to do that probably aren't working. But hey, good for you. What I want you to do is start to think about how you can find good, solid properties and build a team in those areas. This means talk to good providers from the real estate side, understand who the good property managers are, what kind of connections they have for contractors. And then also, you want to think about, when you buy it with your mortgage and everything else included, what will your actual cash flow be, assuming things like vacancy, maintenance, capex, and so on. So the goal now is once we get our first property, we have a little bit of cash flow coming from it. With every single paycheck, I'm sorry, with every single rent check, you're paying a bit of the mortgage off and getting more net asset value. But the overall value of that house maybe goes up 2 or 3% a year, maybe more depending on the area. But on a $100,000 property, a 3% growth is 3 grand, right? But you also have the cash flow. So then I typically would say, like, okay, well, let me take that cash flow, invest that somewhere else that's making a couple of percent while I wait to use it to have my next down payment. Now you've got potentially increased earnings on your W-2. You've got your 1099 flowing. You've got money coming in from the cash flow on the real estate. You've got the depreciation write-off. You've got the tax write-off on the income that's coming in from your mortgage insurance and taxes. And you've got appreciation on the underlying property. Also, in theory, that rent's going to go up every year. So that piece of property, again, we're talking in theory here, is gaining value in lots of different ways every year. So at some point, if you can get comfortable and get your second property up and running, and then your third or your fourth, or maybe start to look at, instead of a single family, say maybe you're buying a 3 or 4 unit, right? Pick up a few of those. Next thing you know, you've got $1 million of real estate leveraged out at 20% down, 80% held by the bank. So for every 100,000 you own with your own money, right, you've got $500,000 in total value. Now you may not have that as a net asset value, but now you're already at 5% of the way to 5 million. I'm sorry, 10% of the way to 5 million. Other people are paying those mortgages off. You're collecting the cash flow, waiting to buy more units. That's the way I approach this, is really granularly calling it out. I'm going to buy, $100,000 unit. I'm going to speak to this realtor, this realtor. I've had 9 conversations with brokers and bankers, yada, yada, yada. Call each step out. Talk to a mortgage broker, talk to an investment banker. I don't mean like JP Morgan. I mean like someone who does investment properties, right? maybe even travel out and see the areas you want to look at. But the reason I'm calling it out this way is we want to make sure that we understand all the components. Start with current financial situation, first move, second move, third move, right? Maybe we get to a point where now we have enough cash flow. We say, okay, real estate's working great, but I want to start to shift some of it into the market and maybe start to buy some stocks perhaps that yield 5-6% and let that start to build up there and double down and reinvest on itself. Or maybe I've got an idea for a small business that I want to be able to potentially push to the side here as well. So all this is to say is at the end of the 100 steps here, you understand that you have perhaps, I don't know, call it 20 doors, right? That have an average value of $200,000 a piece at the end of 15 years, right? But they're yielding 10% and they're paid off. And now you've got a big portfolio of assets paying you passive income monthly because you have property managers and you've got teams in place. And there's your 20K per month passively. You could also consequently sell all of those buildings, right? Take the money, invest it somewhere. Maybe you get that 5, 6, 7% yield that you were expecting. And this is a way to do it as well. But it's the framework for success that matters, because when you have the map and you have the framework, you can build out the exact path you need to take and hold yourself accountable. So I'll tell you right now, I've said this on multiple videos. The amount of people who don't know their credit score, they don't know the net worth, they don't know their income or expenses, they haven't actually talked to a realtor, they're not actually serious about pulling the trigger, they don't have a pre-approval to buy something, they haven't talked to a property manager. And this is just for the examples of doing this with real estate. What I would urge you to do is think about it and try to design it out and say, well, what if I'm really not comfortable with real estate? Well, that's okay. But getting to 5 million in assets to draw $20,000 a month is a pretty huge goal. So there's going to be a lot of discomfort in this process as well. But, I'll give you just a quick example here while I have you for another minute. I'm doing this with my own business, and it's literally so granular. It's things like file the LLC, open bank account at this bank, create T's and C's with this attorney, create this agreement with this attorney. Like really detailed steps as far as the every bit of minutia, not just like startup things or open business, right? Like really understanding like contractual terms, the kind of money, where it's coming from, what your rates are going to be, why you have a certain relationship with the banks and how it's going to work, call it out and who owns it and where it's going to live. So the more and more granular you can get, the more and more minutia you can get here, the better you're going to be and the easier it's going to feel to follow it. I'll be honest with you, even as I'm thinking about this example here, looking at real estate as an example, it doesn't even feel impossible at all. In fact, it feels almost easy when I think about it. If I had 15 years starting at zero right now, and I could go and work my full-time job, pick up a job at night solely for the purpose of getting a down payment, maybe that first year of 15 is so painful because it just takes a whole year to save 20, 22, 3, 22, 23, $24,000 to get that first one. But once you have it, you have it. And now it's building upon itself, right? And because you've taken the time to do it the right way, you have the right relationships and contacts because you've been very, very consistent about calling out who and why and how you're going to reach out. It starts to give you that confidence to do bigger and better things. Before you know it, maybe in 5 years, it's buying a small apartment building. Maybe in 10 years, it's having 15 apartment buildings. I don't know, right? Maybe that goal of 20K is completely blown out of the water in no time. And now you're talking about 200K a month and you realize this is a bigger business than you ever thought it would be. And you don't want to retire at all. But this is the value of having a map, calling the map out, putting it on paper, checking the box, and following your way through to the end. Here is how you're going to drive that success. So anyways, a little bit of a rant at the end. I apologize. I just really do this in my own life around all of my own goals. And I'm telling you right now, if you think you're going to reach big tough, scary goals by just trying hard, it's going to be a lot harder than you think and probably not going to be possible to get there because there's so many things you have to think about that get in your way. And those create mental hurdles. Those mental hurdles would stop you from making the phone call, pulling the credit report, saving the extra money. It's just easier to say, I can't do it and don't do it at all. So, team, anyways, hope this was helpful. Let me know what you think. Always appreciate it. I'm thinking about doing a live stream around this. So it doesn't just have to be on this example, it could be for any example. Anyone would be welcome to join. Of course, it's completely free. I would never charge you for any of this. Let me know if you think that would be helpful, and I'll try to find some time to set that up. Otherwise, really appreciate it. Thanks for watching. Um, let's do some big things. I mean, let's do some big things. You could have 5 million in 15 years by following simple, easy steps. 5 million in 15 years. Easy steps. Think about that. Why wouldn't you do it? On that note, bye, everybody. Thanks so much.